What's going on, guys? Welcome back. We're gonna do like a quick trade recap. I just want to point out that if you guys have watched my video yesterday on Thursday that I made, and you saw it all the way through, right? I recommend watching the whole video before you come to this one. But I mentioned talking about the week's not over. The trades aren't over because we haven't hit Friday. We haven't closed on Friday yet, and that was made true today. So on Thursday, as you saw, we had horrible price action, and I mean horrible. Our initial idea, as you guys saw, was the OT from this swing low to that swing high that was created here, and to wait for price to come down to these levels right here at the OT and to re-enter for calls all the way to all-time highs, because we are literally less than 1% away for SPX to hit all-time highs. So this is the last leg of distribution that SPX needs from this Friday to, well, Monday's off, to Tuesday, Wednesday, all the way to Thursday, if not Friday. So this next week is going to be crucial because it's going to be either the week where SPX dumps and it just regains all this liquidity that's resting down here, or it's the week where we break all-time highs, which could be happening, and I do see that happening, right? Because its break is going to be over for students at least. So that means that there could be more buyers. Anyways, again, choppy price action on Thursday, not too much happening. Original trade idea was this OT level. And then today on Friday, right, I hop on the charts because I believe that, the week is not over until Friday closes. So anything can happen. Now, in my mind, I was like, there's no way price can just dump right here. It's already super bullish. I doubt it. But what ended up happening, and I'm on the 1 hour, by the way, just so you guys know, is price came down, choppy, came up after market, right, pre-market. It swept this high, and this high is the high above the daily fair value gap that we've been trading. It's also a swing high. It sweeps this liquidity, which was rated. Doesn't quite get to this high because it doesn't want to make a new high. It doesn't want to make a new high. It would have been nice to make a new high, but it didn't. It just swept this liquidity and got to that order block. Okay. Then price absolutely dumps. While dumping, it creates pretty sure this was a 15-minute. No, it was a 5-minute. Well, it was a 15-minute inside of 5-minute. I just marked it as a 5-minute. Fair value gap, so 15-minute fair value gap that I marked as a 5-minute. Also is a 1 hour fair value gap here, as you notice, but this is more precise. It dumps, kind of silver bullet, right? This is 7 a.m., 8 a.m., 9 we open bullish, and this is what I saw live. Let me go to, I guess, the 30-minute just to be more accurate. We open on 30, boom. We tap into this 5-minute fair value gap, which it doesn't look like a 5-minute, but I just showed you on the 5-minute right here that it is a 5-minute fair value gap right here at the very top, right? Going back on the 30, you can see price institutionally order flow gets bought all the way, taps into that fair value gap, and then dumps. Now, I did get short. I don't have executions on, but because I had to reset my account. But I went short on paper on TradingView, and somehow my take profit, whatever, everything got fucked up. So I had to reset my account because it wasn't taking profit, whatever. But I did not expect it to dump that hard. Okay, and I personally thought this was going to go higher, but there's this quote saying, "Experience will beat strategy." And that I will have to agree 100%, 110%, right? And you can agree with me too. You can disagree. It doesn't matter. Experience will be strategy. And I have experience with this, right? When you're looking at this, pre-market, it dumps. Market creates like a fair value gap, looks like a silver bullet, but it's not quite silver bullet. 9:30 opening, and then we get like we call this like the unicorn because it's just like, it's a very swing high, it taps in, boom, it starts dumping. It's a unicorn candle, boom, boom, taps in like a little needle, boom, and dumps. Now, I was not expecting this dump, but I knew it was going to go lower. So I started marking, the areas of liquidity, and I was like, wait, there's actually a market structure shift pretty sure I either saw this on the 5-minute. Where did I see this? Now I saw this market structure shift, but I was like, it doesn't. I don't want it to work. Like it's right here. So what I saw was this. Oops. Why is there? There you go. So there's this trend, right, going up, and I'm thinking pre-market. Well, this broke some swing lows, so there has to be, you know, because the swing high was tested from this liquidity, swept that liquidity, so it's, you know, 2 high time frame PD arrays. It's a valid market structure shift. Where is it at, you know, on the 5-minute? Now at first, I don't know if I marked it on the 5-minute. I can't remember what I had it on. I just, oh, it was a 30, I'm pretty sure. So 30 here, but that swing low creates that swing high creates this hold down move, which closes under the swing low, also closes under the swing low, and you'll see on the hourly, it does close on that swing low also. So 3 valid market structure shifts in this little move up. So I marked that, right? Where is it? Right here. Okay. And so I'm like, well, I drew the standard deviation here from here, and I looked at it. And as you can see, standard deviation looks pretty neat because it shows price will hit our OT level today off this market structure shift. And it will even go lower than this OT level all the way to -4. And so I was like, well, if price is going to do that, and it's going to take out that sell side, which is fine, which is right consequent encroachment of the standard deviation, it's going to go below the OT because it wants to get that -4 if it wants to, because I was watching that OT level. If it wants to go lower, where is it going to want to go lower, right? And so I marked out the sell side liquidity down here. And as you saw live, well, you didn't see it live, but I saw it live. And if you were trading live, you would have seen this. It dumped. So it dumped once. Okay, it hit our OT level perfectly. It kind of bounced off there, and I was like, all right, maybe I'll get in calls. That didn't really work out because we got stopped out. Boom, another big candle, and I was expecting this. You know, you don't. And this is experience, and I should have known this. Once you get a big candle like this with a perfect like entry short kind of, I don't know how to explain this, but this is like the perfect way to go short. You can't really just come back. You know, you can't buy everything back. It needs to hit some kind of like big ass PD array or some kind of liquidity that is gonna really turn it around and change your day, right? And so that's what you need to do. So I looked, I was like, all right, well, there's this sell side liquidity. That's probably the least I can do, right? And then I went a little further and I was like, oh, okay, well, how about we go further, right? This whole range. And we're like, this swing low is, it took out this swing low. So it's, you know, it's kind of like it broke the trend in a way, but it didn't quite close under. It's a very spike down. So I was like, maybe that's important. And so I took the OT here and I put it all the way down here, kept the same high because this is the same high. Because there's a break of structure. So this at first I thought it was a market structure shift, but it wasn't. This isn't a market structure shift because we're still bullish, right? This is not market structure shift because you have a swing high that's broken with another swing high. That doesn't make sense. A valid market structure shift would be this swing high creates or reacts off a high time frame PD array, creates a swing low that closes under a previous swing low that created that swing high. Though that doesn't make it valid, right? There's no, and it wouldn't be, the market structure wouldn't be up here anyways. You can't mark it at the swing high. That's not how it works. So it's a break of structure, right? Because we're kind of going bearish, you know, we're consolidation, and then we're breaking out a structure, we're making new highs, right? And so I just, for fun, I just do the OT, boom, and I noticed that there was I think it's an hour or 4-hour order block. Okay, so it's an hourly order block that was resting near the OT level. And as you can see, price comes down, doesn't quite sweep it, but it gets near it, okay? And I didn't really expect price to come down this low until I realized this, right? So as you look, just talked about market structure shifts on the hourly here. And this is why I don't really like doing the strategy very often. But these lows, right, this particular swing low was made on Thursday at 1 p.m. And then this swing low, right, created that swing high on the 1 hour, okay? And then that swing high took out on the 1 hour lead that swing low. So in this case, it's a structure shift, right? So then that means the standard deviation comes down to this swing low from that swing high, right? And if you look, it just got way bigger. And you see where price is resting now? I want you to also notice this -2, -2.5 is in the same area of that order block, almost perfectly hitting that order block to the dot. It's also near that OT level. So there was some confluence that price would revert to this, okay? Now, the reason why I got into this was for 2 reasons. The first reason is that it passed my OT level from this market structure shift, right? This little tiny thing. It passed this OT level. So that would have been my first entry up here. And then we got stopped out. So I wanted to get back in again. It's also, let's look, it's under the discount of this range, this current range. So it's a good time to start buying. Currently it's like right on the dot. We'll have to see what happens over the weekend or even on Monday. And the second reason why I bought is because I wanted to buy. I know I wanted to buy in discount, and I bought a call for 2 weeks. I know it might sound crazy, but 2 weeks gives me a nice long expiration date on this contract. For all-time highs, right? We might hit it on Wednesday for next week. Who knows? That's like 3 days, but who knows, right? I took 2 weeks to be safe because if price wants to come down to that -4, which it could off this market structure shift, which it 100% could and probably will, probably won't, who knows? I want to make sure that I'm not having a 3-day contract where at the end of the 3 days we're down here and we're not up here, right? I want to make sure that in 2 weeks, if we come down here and we start buying back, the contract has time to reorganize itself and to make me money, right? That's the thought. Now, the other kind of scary thought is this actually, might come down even lower. So even though I entered off here, it might not be the perfect entry because remember, this isn't my strategy. I entered off random. Not random, but like a calculated OT order block, whatever. But this really wasn't the play, right? This isn't what my strategy is. This OT itself from that swing low to that swing high isn't off our market structure shift, right? We didn't do any market structure shifts at all. The only one we got was from this little down move at like right here. We got that market structure shift on the 15-minute, and we just marked that swing low all the way to that swing high, and price just never came down. And so when it finally did, it broke right through. And that's what scared me because that means that this level right here was not respected and they wanted something lower. So I'm wondering now, all I need to do was, yes, hit a fair value gap like this, like almost like a silver bullet, hit a fair value gap and it comes lower, right? This could be this. I see this completely honest. I see this dumping again, going past this low. And to be honest, grabbing this low here. I see that happening, to be honest, for that -3. It's like perfectly lined up, like right here. You see this low? Almost perfectly lined up to the -3. I wouldn't be surprised if that happens. We have been bullish this whole time. We now finally hit this high. I just don't also think that this high has a huge impact on SPX. As do remember, look, I'll tell you this, ready? If you take the OT and we turn it into a mean threshold, so you take that swing low to the current swing high, and you turn this into, you can see the discount right here. We're not ready to buy more until we're like past this -3. So see this gray line? I'll mark it like this for the mean threshold. See this gray like dotted line right here? That's the mean threshold. So anything under here is discount. Anything under here we can start buying. So it would make sense for price to come all the way down here to grab this liquidity that's standing out, right? Very high liquidity that's under the mean threshold that lines up with the standard deviation of this market structure shift to maybe even go lower and grab this -4, but there's no levels here to, you know, really pay attention to. There's like this end of this fair value gap that's here on the 1 hour. Maybe it does that. Could see that happening, right? Boom. And then it comes up for higher highs, right? And if it does do that, right, that's why I'd have my what's it called, my break even, and I'd break even, enter short down here, make some money to come down here, and because if this doesn't work out to go up, then I'll short it. I'll short it until these levels. I'll get out early, and then I'll buy it down here to have the 100% move to go up here. I think that's the play. If you don't agree, please let me know. But that's the play, right? Liquidity down here. We have that fair value gap down here too. We're in discount. We have to buy when you're discount like this. It's the discount of this range from this dump, right? That swing low to that swing high, current swing high, if it doesn't make a new swing high. It just dumped again on Friday. Market structure shift on the 1 hour. Let's look at the 4 hour. Let's see if anything happened there. I haven't checked that. Let's see the market structure. Okay, yeah, even that. Like, look, swing low creates a swing high. Boom, yeah, even on the 4 hour, it's a valid market structure shift. This is going down, bro. This is going lower. Even the 4 hour looks promising for a bearish. Does not look bullish at all. Looks like it's going to sell off on Monday, to be honest. Yeah, I think that's the play. There's sell side liquidity up here, or down here, I guess. There's that fair value gap on the, well, not on the 4 hour, but it is definitely a very bullish engulfing candle right here. I think that could be the play right here. So when this candle hits break even, or on Monday, whenever we have the chance, when market opens, we'll sell our contract and we'll enter short actually, all the way to these levels down here. I don't want to predict which level it's going to hit or sweep, but I will tell you that it will ride it all the way down here, and then we'll buy it off. All right. I'll see you guys on Monday. Actually, let me check real quick, because I'm pretty sure Monday we have, let me check. Give me 1 second. Monday, it's a bank holiday. Okay, so it's not off though. Are we? Wait, yeah. Are we off or no? Yeah, no, we're good. I think. I don't fucking know, guys, but I'll see you guys in the next video whenever I upload next. All right, peace.